Hey everyone, welcome back to our channel. Today, we're diving into the exciting world of initial coin offerings, or ICOs, and token sales.
If you're curious about how new cryptocurrencies are launched and how you can get involved, stick around. Let's start with the basics. An initial coin offering, or ICO, is a fundraising method used by startups to raise capital for new cryptocurrency projects.
Instead of traditional shares, these projects sell digital tokens to investors. ICOs are somewhat similar to initial public offerings IPOs in the stock market, but there are key differences.
In an IPO, you buy shares of a company. In an ICO, you purchase tokens that may have various uses within the project's ecosystem.
So, how does an ICO work? Here's a simple breakdown.
1. Project creation. A startup develops a new cryptocurrency or blockchain project and creates a white paper outlining its goals, technology, and tokenomics, basically how many tokens will be issued and their purpose. 2. Marketing campaign. The project team promotes the ICO to attract potential investors.
This often includes social media, community engagement, and webinars. 3.
Token sale.
During the ICO, investors can buy tokens using established cryptocurrencies like Bitcoin or Ethereum.
This usually occurs over a specific period. 4.
Post-ICO development.
Once the ICO is complete, the team uses the funds raised to develop the project. Investors hope the value of their tokens will increase as the project grows.
There are several types of ICOs. 1.
Utility tokens.
These tokens provide access to a product or service within the project's ecosystem.
For example, a gaming platform might offer tokens that can be used to purchase in-game items. 2. Security tokens. These are backed by real-world assets, similar to traditional stocks.
They often provide investors with rights like dividends or a share of profits. 3. Equity tokens. These represent ownership in a company and can offer similar rights as stock shares. They are often subject to more regulations than utility tokens. Now, let's discuss the benefits of participating in an ICO. 1. High potential returns. Early investors in successful ICOs can see significant returns if the project gains traction. 2.
Access to innovative projects. ICOs provide opportunities to invest in cutting-edge technologies and ideas before they become mainstream. 3.
Liquidity.
Many tokens are tradable on exchanges after the ICO, giving investors the ability to sell their holdings if they choose. However, investing in ICOs also comes with risks. 1. Lack of regulation. The ICO market is largely unregulated, which means there are fewer protections for investors. Some projects may not deliver what they promise. 2. Scams and fraud.
Unfortunately, there are bad actors in the space.
Always do your due diligence before investing. 3. Market volatility. The value of tokens can fluctuate significantly.
A project may succeed, but the token's price might not reflect that success immediately.
If you're interested in participating in an ICO, here's how to do it safely. 1. Research the project. Read the white paper thoroughly to understand the project's goals, team, and technology. 2. Check the team's background.
Look into the team's experience and past projects. A strong team can be a good indicator of a project's potential. 3.
Verify the token sale. Make sure the ICO is legitimate.
Check for official announcements on their website and social media.
4.
Use reputable wallets. Store your tokens in a secure wallet to protect your investment.
Avoid keeping them on exchanges for extended periods. The regulatory landscape for ICOs varies widely across countries.
Some nations have embraced them, while others have imposed strict regulations or outright bans.
For example, United States.
The SEC treats many tokens as securities, meaning they must comply with federal laws. European Union.
Regulations are still evolving, with some countries embracing ICOs while others are cautious. China has banned ICOs, citing concerns about fraud and financial stability. What does the future hold for ICOs? While they gained popularity in 2017 and 2018, the market has matured.
We may see 1. Increased regulation. As governments become more involved, we might see clearer regulations, which can help protect investors and legitimize the market. 2.
Emergence of new models. Projects may explore alternatives to ICOs, such as initial exchange offerings (IOs) or security token offerings (STOs), which often come with more regulatory oversight.
3.
Continued innovation. ICOs will likely remain a way for innovative projects to raise funds, but investors must stay informed and cautious. In conclusion, Initial coin offerings and token sales offer exciting opportunities for investors and innovators alike.
However, it's essential to approach them with caution, do your research, and understand the risks involved.
With the right knowledge, you can navigate this dynamic landscape. If you found this video helpful, please give it a thumbs up and subscribe for more insights into the world of cryptocurrency and finance. And let us know in the comments, have you ever participated in an ICO? What was your experience like?